What's up, guys? This is the first Sunday scan of 2022. I hope you guys all had a fantastic new year, and let's get right into it. We're not going to spend a lot of time about all these New Year's resolutions and stuff. We already talked about that in November. We already talked about it in December. You should be ready to hit the ground rolling, running, and ready to go. And, this is, we've been preparing for it, kind of making those changes so that it's not, just something that January 1, you're going to make this change. It should be part of your routine at this point if you did take it seriously and start to make the changes ahead. One big thing that I think could be beneficial to look back at is look at those 5 days last year that you completely screwed up, right? And how do you prevent those? Because it's not just about the loss on that day. It's about the following day, week, or month, right? Now, I've gotten a lot better at that next mentality, the next day coming right at it, and not worrying about the prior day, because I look at the big picture. I look at how far I've come, and I'm confident in what I do each and every single day. And just because I had an outlier situation the day before does not mean that I'm going to have an outlier situation the next day. The reason why is because I decided to disobey my risk management, right? It always comes back to risk management. No matter how good your system is, no matter how many times you win, it's all about what you do with your losers, right? So that's been the biggest change that I personally made over the last couple of years. It's just not scaling into a loser. It's okay if I have a starter on, a little bit of a size, I'll either move on or just not add. And a lot of people just kind of add and add and add and add and add. And what happens is that day that it does not come back, it's got that outlier move. And when the outlier move comes, guess what? You've got probably the most size and you weren't expecting it. And that's why we have those outlier losses. So what does that do to the next day, the next week, the next month, right? Opportunity cost. So if you can't bounce back just like that, then not only is that loss killing you today, it's killing you tomorrow, the next week, the next month, right? So go back and look at those 5 trading losses and think about how much more you would have had in your bottom line, as well as how much you could have compounded that over the next couple days or the next couple weeks and the next couple months. That's what it's about. It's about keeping those 5 blow-up days away. It doesn't necessarily need to be a blow-up, but you know what I'm talking about. The 5 days that really took you off the high horse and took your confidence away. And I'm not talking confidence as like an ego. I'm not talking about being overconfident. I'm talking about coming to the market knowing that you're good at what you do, knowing that you have a good system, knowing that if you continue to do the same thing over and over, you should expect that it will continue to pay. The only thing that's the difference is the losses and what you do with those. So that's something, like I said, I've just spent so much time on keeping those as minimal as possible. And you know what? Sometimes I don't take on as much risk as I used to because it's just not, I'm just not interested. Just not interested in the drawdown just to make the big money. All these low float type trades, I used to trade them all the time. I used to be super aggressive both sides. But you know what? It's that one candle that will take you apart. It'll take you right apart. It's not worth it. So while everybody's watching that one, you've got 1, 2, 3, 4, 5 other trades that everybody's forgotten about that give you perfect edge and a great trade. We had that on Friday, SOPA, ISIG, while everybody is watching NTRB. So those were the 2 main watches off of broadcast and obviously NTRB. But which ones are people going to forget about? And they were fantastic unwinds all day. Go back, look at those 5 days. What did you do wrong? How do you prevent it in 2022? Next is focus on what you're good at. Go back and look at what you were best at. And that's where you want to put your time and your attention. Everybody asks about scaling up. Everybody's like, Nate, I doubled my account, I tripled my account. What do I do to scale up, to size up? Do I just double what my trading size? Do I just double it, triple it? Is that it? No. What you do is you look at what you're best at, and then you start to focus there and scale into those trades, not every trade. And what you'll notice is over time, you're going to start to trade less. And you're going to start to trade the ones that you're the best at because they're the best risk reward for you. It's whatever you're best at. It could be a short, could be a long, it doesn't matter. But it's your setup and it's your go-to setup. And you'll start to realize that if you just start to clear your plate and focus on just those, you're going to have a lot less stress. You're going to have a lot more time. And I think your P&L bottom line is going to be a lot better. Now, I have a couple topics that I wanted to talk about, and I will do some on the video and the screen share. One was looking left on NTRB. We talk about this all the time, simple concept. One I got into, shiny object versus forgotten, NTRB versus SOPA, SOPA, and ISIG. So key concept there is when everybody is so focused on this shiny object, focus on everything else. They're going to forget about this one, this one, this one, this one, this one. And what happens is something that, like NTRB, everybody wants to get that short. Everybody wants to get the breakout, right? So it's just an emotional roller coaster. And it starts to channel. And that's exactly what you saw on Friday. You had a channel. You had a 10 base, and I think it was like an 1140 top, right? It doesn't mean that it won't pop through and pop under or flush under, but for the most part, it held within that channel. And meanwhile, 90% of your attention is focused on nailing that trade when it should be 10%. And then focus the rest on the ones that are a lot easier. A lot of people have asked about liquidity traps. Liquidity traps, I've gone over 1 million times. It's a huge amount of volume. Over a day or two, all of a sudden it just shuts off. But the overall price holds. Then as it breaks out that prior top, wherever the key level was, there's a good chance that these shorts have not had a chance to cover because the liquidity is gone. People make decisions based off of 200 million shares. So maybe on a 200 million share day, instead of trading something with, let's just say, 5,000 shares or 10,000 shares, maybe I'd be trading it with 50,000 or 100,000 or even more, right? But all of a sudden, in 3 days, it's trading 1,000,000 shares, 1.2 million shares, 1,200,000. Spread that over a day. Do you know how illiquid that is? Try to cover 50 or 100,000 shares. You will move the price, right? So if all of a sudden it starts to go, there's no liquidity, and that's the trap. And then it starts to compound, and everybody starts to get squeezed. So you had a lot of that. NES we talked about. NES was one that doesn't even make sense to me. I think it's a deal name, actually. I think it's being acquired for stock or whatever, but same deal. Huge volumes, comes back, hold. You see the wicks that we talk about, and then away it went on Friday. We had EFOI, ENTC, CPOP might start to become one, SOPA, SOPA was one, ISIG recently was one, BFRI, all these trades that had this massive volume, then they just absolutely go away, but the trend doesn't break. There's no exit for shorts, and then you have that secondary move. The goalie setup we talk about all the time. I want you guys to apply that into your strategies and watch for it, because it's not about nailing it. It's about being aware of it and whether or not you have too much risk on at a particular spot, right? If you're anticipating a trade and it starts to become a 50-50 chance, do you have too much size? Do you have too much risk on? You can always size back down and then resize back up. And that's what I do all the time, because it's not worth it in the event that you're wrong. There's no reason to stay wrong or stay in something where you just have a coin flip. You should be risking when you're right? Or when you're on the right side of the trade, or when you have an edge. But when you don't have an edge, when you're on the wrong side, when you're just kind of guessing which way it's going to go, why would you put your hard-earned money after that trade? And last but not least is I think that it's important to focus on what happens after. Used to look for stuff moves. Stuff moves used to be the end, right? Comes up to a certain level, hits an offer, and as soon as it hits that offer and it doesn't budge and there's a bunch of volume that goes off it, that's it. Trade's over. But now that happens, comes back a little bit, they soak, and it ends up being the trap. So what happens after the key either stuff move or key test, a key break? That's what matters, because they know there's just so much demand in this market, so much volume, that strategies that used to work to a T every single time, you've got to adapt and recognize that that should have broken down there, but it didn't. And instead they absorbed it, came back up. Where's my risk at? Do I have an edge? And always ask yourself that. And a lot of times you'll start to realize, or actually, I think the best thing to do is actually listen to yourself. You know, I verbalize these things each and every single week, but when you're at your desk and you're like, I don't know, this could go either way. Listen to yourself. You're telling yourself that there's no edge, but yet you're in the most size that you've had all day. Listen to what you're saying, listen to what you're thinking. It all comes back to kind of being honest with yourself. A lot of times the answer's right there in front of you. You're probably saying it in your mind, but you're ignoring it. And hearing that, like seeing it, letting it in is going to allow you to be a better trader and stay out of this nonsense of, you know, the traps that we see. So anyway, let's get right into scan for the week ahead. All right, guys. So for the second part of scan, this is where I go over what I'm looking for, thoughts that I have for the week ahead, and how I would prepare for particular setups and trades. First and foremost, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're okay with that, continue on, learn, and hopefully you've got some great key takeaways. Before I start, as always, MD, you've got a free t-shirt. Let's go with Daniela Alderete. Probably killed that name. Alderete. Email me, webmaster@investorsunderground.com, and I will also send you a t-shirt. Next week we'll do scans, SCANZ. They are one of the two platforms that I use. I use Trade Ideas and I use Scans. Fantastic. And as always, we always give away a free month of that. Now, like I said, looking left, NTRB. I said I was going to go over a couple things right before we get right into it. So, look at this last run right over here, right? 1232 was the top. Look at Friday's run. 1218 was the top. Always look left. It's not about shorting the top, right? It's not about just, oh, this was so easy. I could just, you know, get that price and it was an easy short. It's not about that. It's about knowing where it could go. Where is the first point of resistance? How is it tracking? Is it tracking for over this volume day? If you're coming into the market and it's already got 20, 30, 40 million shares within the first hour, there's a good chance it's going to take out this volume day. So there's a good chance that it might want to go back and retest prior levels. So the only ones that I care about is the next highest volume bar. And there we had it, right there. And it bounced right off that level. So, second piece that I wanted to share as well. Thinking about, we talked about 1140 and we talked about basically 990s and 10, right? So 990s is because of, you know, the little bottom over here, but we'll call it 10 as well. Put a couple lines on this chart, not to make it too busy, but just to kind of drive home the point. The sooner that you realize that there is a channel here, the sooner you will not spend 90% of your day trying to figure this thing out. And you'll spend 10% of it, set some price alerts, wait for things to happen, and focus on ones that you have the edge on. Now, there's definitely a good trade here. There's definitely good scalping action and stuff, but there's nothing that you can really do a high conviction trade because, sure, there was plenty of times I actually did trade this, and I was up a bunch of times, on these flushes and stuff decently. But, I'm looking for a little bit more. And so then it comes back up, and I've got to kind of protect. And the reason for that is because I don't want to have this one candle where it goes into a circuit halt, and, because I was trading something without an edge, I ended up having an outlier loss. That's not what I'm looking to do. I'm over that kind of stuff. And I'm focused on edge. I'm focused on where the real opportunity is, where the real liquidity is. And that's why you saw me on stuff like Facebook and TQQQ and AMD and things like that on that particular day, because those had better edge, as well as SOPA, SOPA, and ISIG. And everybody was watching NTRB trying to figure it out in that one little channel. The sooner you see that channel, the sooner you're going to know that you need to just take a step back and stop trying to be a hero. So, NTRB. We don't know yet. We don't know if, they've walked, if they just did what they did and that was it, and they're done with the trade. We don't know if it's just step one of a potential big squeeze. It's a very thin float, and it had a ridiculous amount of volume. So there's always that possibility that we have that weak open and then circuit halt back up. So for me, I think borrows are going to be extremely expensive. I think we're going to have some really good action on other names. I'm going to have it up. I'm going to be focused on those key levels. I'm going to be looking for potentially a weak open and circuit back up. I'm going to be looking for a strong open, the blowout of shorts, and then fade off. But if it's not something that just kind of lays its hand out there and says, hey, this is what's happening, it's off radar. Let everybody else focus on that, because you know what? We're going to have 5 other really, really nice and clean setups while everybody's trying to figure this thing out. That's one of the biggest changes that I made, I would say, in 2021 is forget the one that you think you want. Focus on where the edge is. Let everybody else try to figure it out, and you just sit back. BBIO. So on Friday, I had suggested that we'd probably get a decent squeeze out on this thing. The volume's staying pretty nice. We talk about the liquidity trap and how volume potentially would die off. So for example, NES we talked about had this huge volume. You had these wicks, ENSC, no, wrong one, ENSC. Volume dies off, and then you have the second move, EFO, same deal. You're starting to see the same thing over and over. Okay, CPOP is the potential over here. If it starts to consolidate and base over 350s, we have a potential there. SOPA, same deal. We had a pretty much a big volume day, consolidate, and then blowout. And not so much, I guess, a liquidity trap on that one, maybe more so on ISIG, where the volume's gone. Everybody gets short, not looking left, seeing that, hey, we're just right back into this resistance. They use all those shorts to blow it out. But the difference between that and BBIG is you have this consistent volume, right? Not BBIG, BBIO. You have this consistent volume. And what I think happened is a lot of people thought that this was going to be just like ALLK. They thought it was going to be just like ADGI. And basically those ones came down. They rebounded for a day or two, right back to the lows slowly, right? And so everybody sees that twice. And so why would they miss out on the next one? It's easy, right? The other two did it. This is the same exact setup. Why not do that on this one? And I think that that's exactly what people did. I think this was sort of a trying day where, shorts came in and then all of a sudden it started to hold. And then Friday, I believe, was sort of the start of the squeeze day. So I think a lot of people all were on the same page comparing it to those ADGIs and ALLKs. I think they tried to do the same exact move. And I think at this point now it's the blow off of those shorts. This could easily go 18, 20, 22. So don't step in front of it thinking that, okay, that was the squeeze, that's it. But I am prepared for when it does blow off. But keep in mind, this thing has gone from 11s up to 17s. So the higher it goes, the better. Don't worry about missing the top. There's going to be plenty of backside after the squeeze out. You don't know. You could be $5 too early still. Okay, so just be cautious, but look for the proper setups. We had a proper setup. We had a nice blow off on Friday, but it's not anything that you want to stick around for until you start to see it fail to follow through. And I think the same sort of levels that I gave in the room, that 1650 would need to peak out in order for me to be patient and let a trade unwind. So I think that's a good level for now, but for the Monday and Tuesday and Wednesday, I'm just hoping that it continues to go higher. But keep it on radar. Don't underestimate how far this could go, how high it could go. But I do think that a lot of people all treated it the same and are currently getting squeezed. AMD, I've got up there. TQQ, same deal. Facebook, same deal. I just have AMD on scan. It's been a great trader. I will continue to trade it with the market. Perma, unbiased. So, yeah, I prefer to short this thing. I'm better at finding those spots. But if it stops going down and we start to get a nice, press on the market, then these things are going to rebound nicely as well. So it's been a great trader, great entries in the room lately on all of these. So be patient and let these trades come to you. Failed follow through, I've got SOPA, MBOT, and ISIG, and BFRI. Okay, so I also have GRTX, but I'll talk about that one separately. The other ones are all pretty much the same concept. There's gonna be days that they're gonna rebound. And BFRI, had that, you had this rebound day. So let it rebound. Don't try to find the tops those days. Let it rebound, let it do its thing, and after it pulls back and fails to follow through, that's where your edge comes in. They can rebound further than you think on bounce days. So just be aware of that. And sometimes it will catch shorts all trying to do the same thing. So SOPA, for example, if it were to be strong on Monday, don't, just because it's up $1 does not mean that you just jump in front of it. It could go another $1, could go another $2, right? The key is let it do its thing, let it dance, let it push, fail to follow through, and after that exchange comes, that's when I think it's a good spot to get interested, because there's going to be a lot of people that are trying to find that top. And BFRI is a perfect example of sort of that situation where if you step in front of it, you could just become part of the problem. And although you'll be right, it might not be on your timetable and it might not be to your risk. So you might be stopping out when you were right all along. So same deal. MBOT, tougher trade. Liquidity wise, you can see pretty much this channel that it's been kind of trapped in, 780 range to 880 range, I would say. I think that they screwed all the shorts this day, then it comes back. I think they did a good job of trapping longs. They blew it off over here. If longs did not get out on this candle over here, then I think it's just going to be a slow, steady kind of fade back. There's zero liquidity on this trade. ISIG, same deal. It's been a fantastic one. Tiny float. It's actually been a really good trade for me. And I think it's just because I'm not trying to be a hero on it. I let it do its thing. I dabble, wait for the backside, scale in, and I'm not trying to get every square inch of this trade. BFRI, same deal. All same concepts. Higher the better. Failed follow through. The next one was GRTX, and GRTX is just one of those. The liquidity is starting to dry up a little bit. I do think people are going to start to forget about it. I want to keep it on radar. And I think that, your key levels are going to be in this 430 range, 420. Those are the key levels. The prior days we talked about 420, 430 being, the area where there was a lot of resistance, which now became support. And you can see that it's starting to have a little bit of trouble in the 450, 470 range, right? It's starting to close under those 460s. So I would not want to get too aggressive in between this channel right here, but set those price alerts. Don't lose it off radar. And if it does not break out soon, I think we're going to have a nice 50, 60, 70, 80 cent pullback at some point soon. Last two is CPOP. Like I was saying, I think, you know, if it starts to base over those 350s, we've got the potential of a decent squeeze. I think a lot of people were shorting for a lockup. I don't think they got the move they were looking for. And at this point, all shorts are upside down. It did push the 380s after hours. It's one of those that could open, you know, pre-market over 4 and be the sort of the flavor of the week. You know, or at least appear that way for the pre-market, and whether or not it holds, we'll find out. But let's see how it fares. I'm still positioned there, and just kind of letting that good trade work. And then TRT finally had a nice breakout day. Again, been here for a while. We've talked about it on many Sunday scans for over a month now. So so far so good. You see the wicks. We talked about all these wicks over here. Came back, tested VWAP. You see the wicks again. All the dips getting bought, new support. So I will continue to ride it until it doesn't work, and we'll see what happens. But that's about it, guys. I hope you guys all have a fantastic rest of your Sunday. I'll be at the Patriots game today. So while you are watching this, actually, it's a 1 o'clock game, so it'll probably be done by that point. So anyway, I hope you guys, I'll see you guys in the room. If you guys have any questions, you know the drill. Reach out. Leave your key takeaway in the comments section. Write the timestamp. If it's 5 minutes and 13 seconds, 17 minutes and 20 seconds, whatever it is, write it, and it will automatically link so that somebody else can go back and check it out and see what your key takeaway was and see if they can pull anything from that. And like I said, we'll be giving away scans next week, and we'll see you in the room.